What if your money is gone? Bank closures can impact you too. On March 10, 2023, the world woke up to the shocking news of the second largest bank failure in United States history. The 16th biggest bank in America, Silicon Valley Bank, collapsed after a bank run that saw customers withdraw $42 billion in a single day. Shortly after, another bank, Silvergate Bank, collapsed, prompting the U.S. government, led by President Biden, to issue a statement reassuring Americans and the world at large that the U.S. banking system is safe. These banks are currently under the FDIC's control. Another crypto-linked bank, Signature Bank, has since been taken over by the FDIC. This video will look into these catastrophic bank closures and what it means for you, the U.S. economy, and the global economy at large. What do you think about this troubling development? Please comment after watching the video. We'd love to hear your thoughts. Is your money safe? Well, Silicon Valley Bank was primarily a bank for venture capitalists and Silicon Valley startups, and Silvergate Bank and Signature Bank were primarily banks for players in the fintech and cryptocurrency industries. These bank closures raise serious concerns for depositors. How does this impact other banks, the U.S. economy, and the global economy as a whole? Why did these banks collapse? At first glance, a bank run may be to blame for these failures, and this isn't the first time for a bank run to happen. However, the Silicon Valley bank run was different in that it was fueled by social media. But what exactly is a bank run? Well, banks receive deposits from clients and invest, issue loans, and use a portion of these deposits in other ways, legally, based on the premise that all customers won't come at once to ask for all their deposits. In a bank run, the amount of deposits customers want to withdraw is more than what the bank has at that moment. The three banks lacked enough cash to give every single depositor that came for their money. Is a bank run the reason for the collapse, in your opinion? Let us know what you think. If you're enjoying this video so far, please like and subscribe to ensure you never miss out on similar videos from Cognition. Rising interest rates. Some experts argue that the Federal Reserve's action of increasing interest rates rapidly since 2022 to fight inflation could be to blame. Banks usually make money in many ways, including investing some deposits in safe investments like U.S. bonds and related securities. However, these investments aren't so safe if the interest rates keep rising. In fact, the returns of such investments dwindle if the interest rates increase, and vice versa. Silicon Valley Bank has been on record stating that the bank lost $1.8 billion invested in safe securities, and they were unable to offset this loss. This revelation caused their stock to lose value, and many venture capital firms began withdrawing money from the bank. SVB customers followed after that, triggering a total collapse. Management misconduct and regulation. There are also concerns that misconduct could be to blame, as reports indicate that SVB directors and executives recently cashed out $84 million in SVB stock. It's easy to conclude that executives and directors who can engage in insider trading are also likely to engage in other malpractices that aren't in the best interests of other stakeholders. However, we can only wait on the inquiry on SVB to establish if there was indeed misconduct. Others also point to insufficient regulation. The rolling back of a critical ACT, Dodd-Frank Wall Street Reform and Consumer Protection Act in 2018 lowered the asset requirements for small to medium-sized banks, exposing them to problems during tough economic times. Is your money safe? Since the FDIC insures bank deposits up to $250,000, you may be safe if your bank account balance reads less than this. If you have more, it may be wise to spread those deposits across several banks, ensuring no single bank holds more than $250,000. But what should institutions or individuals with millions or billions in deposits do, considering the FDIC can't fully insure them should a collapse occur? Well, they can start by ensuring they bank with too big to fail banks that are adequately capitalized and have the assets to withstand difficult economic times. Are you worried about your money? Bank closures are equally worrying whether they are caused by a bank run, rising interest rates, misconduct, or poor regulation. Since 3 banks are already under FDIC control, you may be asking what will happen if your money is gone. Do you think your money is safe in the banking system, or are you worried about the security of your finances? Let us know your opinion by commenting below. Also, please remember to like this video and subscribe to our channel for more fun, factual videos from Cognition.